Hello everyone, the market is giving mixed signals. It's like that girl at the party, you see her looking at you, but no, she's actually just cross-eyed and you misunderstood her interest in you. So anyway, in today's video, we're gonna have to look at all of the different charts and explain, basically, I'm gonna give you guys my thought process of why there isn't clear-cut direction in the market. And yeah, without further ado, let's get started with the video. Number one, tomorrow morning we have core PPI data, unemployment claims, and Philly manufacturing index news coming out at 8:30 in the morning. This is pre-market, so obviously it's difficult to hold any swings overnight because of this data that's going to come out before market open. So therefore, this is just one reason why we didn't want to hold any major swings overnight. Okay, so that's number one. All right, so I also want to take a look at the dollar. All right. So we know that the dollar has an inverse relationship to the market. So if the dollar is doing well, then the stock market, wait a second, the stock market should be falling, right? Clearly, the dollar looks like it should be breaking out, and this is a very, very strong pattern here. This is a bull flag, a very strong green candle. We can easily go up tomorrow. Right, so the dollar clearly looks strong, right? So if the dollar is strong, we know that the stock market should be falling, okay? So the dollar looks strong. Now the issue is that there are conflicting signals. Some things look bullish, some things look bearish. This is one of the most important conflicting signals. So we see that the dollar looks good, okay? So now just keep that in mind. The second thing I want to take a look at is the 30-year bonds. We know that the bonds have a more correlated relationship with the market. So if the bonds are weak, right, then the overall market should also be weak, right? So the bonds and the dollar are showing market weakness currently. So obviously, like when you have like a setup like this, there is a lot more room to fall to the downside in terms of distance away from the Bollinger Band, because you can see that the lower Bollinger Band is in free fall. So as the 30-year bonds, it's basically we can fall down tomorrow even more, and it'll just be the first day outside of the Bollinger Bands. Does that make sense? So there's still going to be multiple days after that potentially where we could be falling. So for that reason, the bonds are still showing a lot more room to the downside. The other thing is that the MACD indicator is showing a crossover here on the MACD, yet the price action of the bonds are falling much lower. That is usually very, very bearish. It's kind of scary to see that. But yeah, just all in all, the bonds we can clearly see are also bearish. Now I want to take a look at the VIX. So the VIX, we know, has a inverse relationship to the market as well. So if the VIX is showing weakness, then the market should be rising. It should be showing strength. So the VIX is the first thing that shows a different direction than what the bonds and the dollar are showing. So the VIX clearly looks very, very weak. It's very, very difficult to say that the VIX is in a bullish structure here, right? So clearly, like, there's a lot more room to fall on the VIX to the downside. We can see that the MACD also crossed below, and usually when we cross below, we have at least one day more where we can fall down even lower. But the issue here is that basically the VIX is currently differing from what the bonds and the dollar are showing. So the VIX is still showing that there's more weakness in the VIX, which is potentially strength in the market. Whereas on the dollar and the bonds, we clearly saw weakness, potential weakness in the market due to the strength in the dollar and the weakness in the bonds. So this is, all three of them are not giving a strict signal or a strict direction. We can see that the VIX is differing from the bonds and the dollar, okay? Next, let's go ahead and we have to take a look at the rest of the market, really. So let's go ahead. Start off with the SPY. So now the SPY, clearly this is a very bullish setup, right? We were ping-ponging around these past few days. Yesterday was a very ping-ponging day. Today we closed pretty strong. But basically anything above, I mean, look, this is very difficult to be bearish. All right, this setup, very difficult to be bearish. Clearly this is a bull flag. We could potentially break out. Everything looks pretty solid for a potential breakout, right? And in my opinion, anything above 412.50, above 413, we could always just hop right, like bounce off of that level and continue up. So the SPY clearly looks strong, right? The NASDAQ clearly looks strong as well. Like, this is obvious. This is, how are you supposed to say that this is a bearish setup? This is a very, very strong move, right? The IWM clearly also looks very strong, right? Now here's where things get even more dicey here, all right? So when you're taking a look at the large, so first we should definitely take a look at the large tech stocks, okay? So let's take a look at Meta. Meta is holding support. It doesn't look too strong, right? Netflix looking pretty good, decent, bullish structure still, right? Apple looks fantastic, and Apple is a $1 trillion company. Apple is doing well, and Apple continues to do well. It can help pull the rest of the market up. So Apple looks fantastic. Google bounced very, very well, and also this is very difficult to be bearish. There's still, it looks like there's more room to the upside, at least, right? Amazon's not doing like amazing, but it's doing well. Microsoft isn't also, it's not Apple, but Microsoft is also doing well. Then when you look at Tesla broke and closed above the recent highs that it had from February 9th. So it's making new highs. So whereas Apple and like the rest of the market and everything were trading down here, Tesla broke above, and it's showing like there's a lot of relative strength in Tesla. It's showing, we're seeing a lot of strength out of Apple. We're seeing a lot of strength out of the overall equities market in general. Everything is showing a lot of strength. On the stock market side, clearly things are showing a lot of strength. But once again, we have to tie it all back together. The bonds are showing weakness. So the bonds are usually a very strong indicator of what is to come in the market. So the bonds are clearly showing weakness, and we know that there's a correlated effect in the market and the bonds. And then the dollar is showing strength. So we know that there is an inverse relationship between the dollar and the market. So the stock market looks strong. We looked at all the charts, right? But the dollar also looks strong. And when the dollar is doing well, then the market should fall. So there's some discrepancies here right now. So that's the only issue. And then to top it all off, we have that news tomorrow morning. So it doesn't make things any easier. So we're currently not holding anything close dated overnight. And with that being said, I mean, on days like this, especially with news tomorrow morning, it's basically just a toss-up. So hopefully tomorrow morning, after tomorrow, we'll get better direction in the market. We'll have some sort of a better like understanding of where we want to be in the market. But the entire equity setup, all of the stocks and everything themselves, they look very, very bullish. But the only issue is that the dollar and the bonds do not. So yeah, I don't really know where we're going to go. But once again, you know, I do think that as long as we hold above 412.50 to 413, we should continue up. This is a bullish setup. And yeah, I mean, but it all depends on tomorrow morning. But yeah, I hope you guys really enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you.